You swipe your credit card. You pay it off every month. You've never carried a balance, never missed a payment, never paid a cent in interest. So why is your credit card company still making money off of you? The answer isn't something they put on a billboard. It's built quietly into every single purchase you make, whether you realize it or not. Start with the obvious piece: interest. If you carry a balance, you pay it. And for many cards, that rate sits well above 20% annually. According to the Federal Reserve, average credit card interest rates have climbed for years, often outpacing almost every other form of consumer debt. That's the part everyone already knows about. But here's the twist. Cardholders who pay in full every month, the ones doing everything financial experts recommend, are called deadbeats inside the industry. Not because they're irresponsible, because they don't generate interest revenue at all. So how does the company make money on you? Every time you swipe your card, the merchant pays a fee. It's called an interchange fee, and it usually lands somewhere between 1 and 3% of the purchase. You never see it. The store absorbs it, and it's baked quietly into the price of everything you buy, whether you use a credit card or cash. The Nielsen report, which tracks the payments industry closely, has documented that interchange fees generate tens of billions of dollars in revenue every year across the United States alone. Why does the merchant just accept this? Because refusing card payments risks losing customers who expect the convenience. Visa and MasterCard built networks so widely used that businesses feel they have no real choice. This is where the reframe comes in. Your credit card isn't just a way to pay. It's a toll booth, and every transaction pays a toll, even the ones you never carry a balance on. Now add annual fees. Premium cards often charge $95, $250, sometimes $500 or more per year, in exchange for airport lounge access, travel credits, or cashback multipliers. These fees are straightforward. You know exactly what you're paying and exactly what you're getting. But card issuers count on many cardholders not fully using those benefits. A $550 annual fee that includes a $300 travel credit only breaks even if you actually redeem that credit. Miss it, and the card just quietly cost you more than it gave back. There's also a subtler layer: late fees and penalty interest rates. The Consumer Financial Protection Bureau has published research showing that late fees generate billions in revenue industry-wide each year. Miss one payment, even by a single day, and some cards jump your interest rate to a penalty rate that can stay elevated for months, sometimes indefinitely. This single missed payment can end up costing far more than the minimum payment itself ever would have. Why does this system work so well for card issuers? Because it's diversified. They don't need every cardholder to carry a balance. They don't need every cardholder to miss a payment. They just need enough people across millions of accounts doing a mix of these things for the overall system to be extremely profitable. Illustrative example: if even a small percentage of cardholders carry a balance at 22% interest, while the rest generate steady interchange revenue, the math works out extremely well for the issuer, even though any single cardholder might feel like they're beating the system. So what can you actually do with this? First, understand that paying in full every month genuinely does protect you from the most expensive part of this system, the interest. You're not beating the system by avoiding interest. You're simply opting out of the most costly layer. Second, if you carry a premium card, calculate honestly whether you use enough of the benefits to justify the annual fee. Track it for 1 full year if you're unsure. Third, set up autopay for at least the minimum payment, so a single missed date never triggers a penalty rate that could follow you for months. The Bureau of Labor Statistics doesn't track credit card profitability directly, but industry reports consistently show that card issuers remain profitable even when a majority of cardholders never pay a cent in interest. That should tell you something important. This isn't a business model that depends on catching you in a mistake. It's a business model built on volume, fees you rarely notice, and a small percentage of cardholders whose interest payments quietly subsidize an entire ecosystem of rewards and convenience. This video is for educational purposes only and is not financial advice. Always consider consulting a licensed financial professional before making decisions about credit or debt. So the next time you swipe your card and pay it off in full, remember, you're not invisible to the system. You're just standing in the part of it that doesn't need your interest to keep the whole machine running.